Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Well, good evening, ladies and gentlemen. Thank you for joining the Smartkarma Weekly Forum. Before I kick things off, I want to wish all of you a very happy new year. I hope all of you got some good rest and time with family and friends and are ready to hit work as well as markets. Just a quick reminder, the forum is a weekly live webinar. It's meant exclusively for Smartkarma Plus subscribers. We use the forum to discuss some of the best, highest conviction insights across the Smartkarma network. These can be thematics, these can be individual names, and we also from time to time invite analysts and allow members to ask guest speakers questions directly. Just a quick disclaimer, this is meant strictly for our subscribers. It's purely for informational purposes. It does not constitute investment advice. It represents the opinion not of Smartkarma, but that of our insight providers. And lastly, Chatham House rule applies. So please do not share any of this information on social media without our express permission. Quick look at where we left off. On the 16th of December, we spoke briefly about Moderna, and we spoke about how the recent decline in share price is an interesting opportunity. We looked at some of the Chinese tech names, especially Kuaishou after the sell-off, and we spoke about CNOOC, a large Chinese state-affiliated oil company, which we felt was an outright buy. The forum prior to that, we took a look at Yueishu Transport, the first toll road company to list an infrastructure REIT in China. We looked at a Singapore-listed Yangzijiang into a spin-off, and we also discussed the Grab SPAC listing and how the network was very bearish on this particular SPAC IPO, or SPAC listing, I should say, and so on. You'll notice that every week it's a nice mix of large, small, mid-cap, differentiated ideas. What we've also done is we've created a channel on YouTube where we post forum videos with a bit of a lag. But we do it so that in case you've not been able to attend the live session, you can still dial in and look at these recordings conveniently at your own time. Also, you might want to share these with friends and discuss them with people that you think know the space well. So the YouTube videos make it very easy for you to do that. In today's forum, we're looking at 3 ideas. The first would be a Singapore-listed REIT called Mapletree Commercial Trust. Second is Fortescue. This is one of the larger commodity stocks listed in Australia. And last, we are going to look at a very, very small Hong Kong-listed company called Taste Gourmet. Let's kick things off. Mapletree Commercial Trust. This is an insight from Jason Yap, as well as there are a few others on the platform, including Travis Lundy, who've written about this situation. It's a $5 billion market cap company, trades 15 million US a day. So it's very, very investable. Quick look. MCT, which is Mapletree Commercial Trust, is a Singapore-focused REIT. It invests in office and retail properties and other similar real estate assets. Mapletree North Asia Commercial Trust and Mapletree Commercial Trust are merging in a very large transaction. This will actually make the combined entity one of the top 10 Asian REITs. The deal has been organized in a way that it's accretive for MCT unit holders, and but they are, and for Mapletree North Asia, it is a little bit dilutive, but they are being compensated through a scheme consideration. The enlarged entity would be very diversified, pan-Asia, really. And because it'll become a much larger REIT, it would have a significantly higher weighting in the NA REIT index, as well as the local indices, which would result in sustained passive buying in the stock as well. So, in a year when REITs are expected to be lackluster performers, we think this sort of consolidation between two large REITs under the same parent will result in favorable performance. Moving on, next idea is Fortescue. This is a very interesting commodity name here. First of all, it's a very large company, nearly 45 billion US dollars. It trades almost 170 million a day, extremely investable stock. And as the subtitle here implies, it could be trading on a double-digit dividend yield here. So let's take a quick look. For those of you who are not familiar with Fortescue, this is one of the bigger iron ore producers that's listed in Australia. Iron ore prices are driven largely by the liquidity conditions in China. As you all know, last year was a very difficult year for China. Liquidity conditions, the credit markets were tight, the real estate sector did very poorly. But we've started to see from late Q4, October, November onwards, China started to ease up a little bit. So the total social financing numbers, this is basically lending numbers in China, they started to increase year on year, which is going to stabilize the real estate sector. This also indirectly results in higher steel production and is very highly correlated to iron ore prices. Steel mills in China, despite the slowdown, have been operating on very high profitability of over 800 RMB per ton. And when steel mills operate on such high profitability, it's usually easier for iron ore producers to raise iron ore price as well. Now, if iron ore prices average $120 to $130 per ton this year, you're looking at 12% plus dividend yield for Fortescue, which is very generous and which suggests upside to current share price. Before I move on, I think another thing to consider is this is a year when interest rates start to potentially go up, at least in the US. During such an environment, you typically see reflationary proxies continue to do quite well. It is a sign of stronger growth in markets. And that could also be potentially something to bear in mind when one considers commodity exposure. Lastly, moving on to Taste Gourmet. The ticker here is 8371 Hong Kong. This is a tiny company, $45 million market cap. It's also quite illiquid. This thing barely trades at the moment. Despite all of that, we think this is a really interesting idea, and I'll quickly recap the thesis. So Sumit Taneja, who looks at the stock, is very well known on Smartkarma weekly forums for bringing to us ideas like Oriental Watch. And he's the one who has unearthed this particular one as well. Taste Gourmet operates a chain of restaurants. Most of them are in Hong Kong, a few are in China. This company is very strong on execution. So the F&B sector typically reports 4 to 5% net margins, but Taste Gourmet, despite a very challenging environment in Hong Kong due to COVID, due to protests, has delivered well above industry average margins of about 8%. Also, this company generates a lot of cash. So as you can see on the chart on the right side, the net cash continues to grow. It is currently at about 30% of the market cap. The company is expected to expand this further and pay out very large dividends. If you look at the dividend payout ratio that is expected this year, you could see a dividend yield of at least 9%. What makes it even more interesting is that were COVID restrictions to be relaxed in Hong Kong, and if mainland Chinese are allowed to come to Hong Kong more freely again, and if international travel is also opened up, I know it sounds like a distant dream, but it will happen at some point of time. That would immediately make the stock a multi-bagger. So what's interesting is you're getting paid 9% dividend. You're sitting on a very, very cashed up balance sheet. And you're sitting on a stock that, despite all of this, is growing and can immediately, double, if not triple, the moment reopening happens. And that's what makes this a very interesting microcap stock. With that, I'm going to wrap up today's forum. If you have any questions, please post them on the Smartkarma platform as discussions or chats. Again, you can go back to our YouTube channel to look at some of the past recordings. And we look forward to your participation in next week's forum. Thank you very much.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.